Good morning, my dear students. So, online students, please say a hi, hello, so that I'll get to know that you are with me and I'm with you. And let me know in the chat box whether my voice is loud and clear. Very good. Sure. So, very good morning, my dear students. Welcome to day 0 of our subject Strategic Financial Management, and also day 0 for the group that you're writing and day 0 for the classes. My name is CA Tawfiq Tufail. I hope you all know me, and if you don't know me, I'll give you my introduction in the coming course. Before starting the subject, I want to have some expectations clear in the class. Always in the start of the relationship, if we keep our expectations straight and if we keep our expectations clear, our relationship can move very further. This is also a life lesson for you. Before the start of any relationship, we have to keep our expectations straight. We have to keep our expectations clear so that there will not be any misunderstandings in the further. I'm talking from the teacher student relationship only, but it applies in all the relationships. I'm having, three and very clear expectations from my side. You can also tell, okay, what are your expectations, then we can work around it and then we can have a very smooth batch. Are you all ready to hear my expectations? Please write it in the comment box. I'm waiting for your responses. Yeah, very good, Naresh and Anjana. I'm seeing Sujita, and then I'm seeing Molan or Malolan, if I'm not wrong. Okay. See, my first expectation that we all just did is a response. That is what is my first expectation. If I'm asking some question, we all have to be responsive, because I don't want this to be a one-way class where I am just lecturing and you're just listening or sleeping. Okay, what I want is that we all can have an environment where we will be having a two-way learning. We will be learning through question and answers, where I will be asking you questions, you will be giving me answers, and then again I will be cross questioning you, then you will be giving the answer, like how in a court we will be cross examining. So that is what, okay, that is what we are also trying to do. That is what we are also trying to do in our subject. I want this to be a two-way interaction. So that is what our class is going to be. That is what is my first expectation. Coming to my second expectation, see, first one is I want the class to be interactive. I want the class to be responsive. Okay, make a note. Okay, If you follow this expectation, then I will be very happy in this relationship. I will also follow your expectation, you don't worry. Okay, I know what and all expectations you guys are having. Except singing and dancing, I can do everything. Everything means in the subject. The second expectation that I'm having is that whenever, and this is little bit tough, okay, little bit tough, whenever I'm giving you some homework after the classes, sir, you all will give homework and all, yeah. Whenever, okay, I'll be giving you homework in the classroom, I want you to complete it in the next day. I know that you guys are busy people, going to offices, going to colleges, okay, but no worries. Little bit dedication is something that I want from you. Whenever I'm giving you some homework, what I want is that you can do that homework in the next day or grace one more day. Okay, grace one more day. So in one day, I want you to complete the homework. That is what is my second expectation. I know it is a little bit difficult. In the start, you guys will do, but as and when the class will go, you all will feel lethargic not to do. But yeah, take it from me, a little bit of dedication can make wonders. This course is all about dedication step by step. If you solve one question at a time, if we solve one chapter at a time, things becomes very simple. Are you all with me? Again, response. Good morning. A lot of new students also joins. Good morning. You can write it in the comment box. I can also read your names. Very good, Baf. Okay. Then the third expectation, I will keep it as a suspense. Okay, in the coming course, I will tell you what is my third expectation whenever I see the right time. Now, let us come to our subject. Don't think that directly I'm diving into the subject. If I'm talking about, let me come to my subject. First, I will tell you what are we actually doing. Why are we actually here together? See, this subject, strategic financial management, I know that lot of people are having an aversion towards this subject. Like whenever they hear this subject, people will be like, yo, how will I study this subject? If you see your book, it will be so thick. Yo, what I will do? Correct. Correct. You all can agree that I'm having some, I'm having this subject is very tough. It's a nightmare. For few students, it will not be. But for most of the students, this subject is like a nightmare. You all will feel like, yo, what I'm doing? This much thick book. I have to do a lot of problems. I have to remember all the formulas. And there are some, 150 plus formulas in this chapter. Hey, I'm not giving you, I'm not scaring you and all. I'm just telling you for a fact that we are having 150 plus formulas to remember in this subject. That is the bad news. But I also have one good news. And the good news is that you are not going to remember even a single formula. Sir, how? Because we are going to study our subject so logically. People who knows me know me. We are going to study the subject so logically that I will not make you remember even a single formula. That is my commitment in the day 0 of our class. That you are not going to remember even a single formula. each and every formula, the logic will be explained in such a manner that will be helpful, and that will be so much impactful in your mind that you will remember till the end of the examination. So that is how we are going to approach this subject. Are you all with me? Again, response. Adikadi I will test pa, so that I should be knowing that you guys are not sleeping. Anyways, I am not seeing your faces in Zoom. I am only seeing the dabba. Though I cannot even see your faces. Who knows how your face is with you, pa? You guys are just woke up and opened your phone, sitting in night dress, huh? Someday we will meet in real also, virtual to reality. That is the actual VR that we are going to see. Someday we can do that also. A special meetup. I don't know where are you guys from. You guys will be anywhere from India. But if you guys are in Chennai, or you can plan a meet to Chennai, we can have a meet someday towards the end of the batch. Virtual to reality, we will call that session. Are you all with me? Again, good. Fine. Now, very good, ba. So, okay, with this positive attitude, let us now, officially start the subject, or let us start the lecture of what we are going to see. I hope you guys have saw the demo lecture where I have just started the subject and I've just explained what are all are the things that are there in the strategic financial management. I hope you all saw the demo lecture. In that lecture, I have just told that in what is the syllabus of the subject, how much marks, how much weightage, how the question comes, okay, how to approach the paper. Those things and all I have discussed in the demo lecture. If you have not watched that, you can watch it in the YouTube channel. It is available in the YouTube channel. Even though you have not watched, I'm still again going to tell a lot of things in this class also. Now, in our subject, strategic financial management, our subject is divided into 5 sections. The first section is investment decisions. The second is security analysis and portfolio management. The third is financial risk management. The fourth one is international financial management. And the fifth one is digital finance. I know that these chapters are alien to you, unknown. How I'm telling is like I'm firing bullets. Investment decision, security analysis, financial risk management. You all are hearing like that only, na? International financial management and then digital finance. Okay, these are the 5 sections. So your subject is divided into 5 sections, and each section is having a weightage. Okay, like investment decision, the weightage is 25 marks. Security analysis, the weightage is 35 marks. These are the approximate weightages. So it will come, around these weightages. Financial risk management will be 20 marks. International financial management will be 15 marks. And digital finance will be 5 marks. More importantly, people who don't know, your paper is of 100 marks paper. Okay. See, this is pattern for the examination. For now, it is not relevant for you. Why? Because in our classroom discussion, we are not going to see, okay, about exams and all. It will be an exam oriented batch, but we are not going to study for the examination. First, we will be study for fun. We will have fun with the subject. We will study everything that is there in the subject. We will study left and right of the subject. Left, right, top, bottom, inside, out, everything we were going to study. We will have fun. and then we are going to shift our focus into examination. Since the word itself is like strategic financial management, first we'll study financial management, then we will apply our strategies. Okay, then we will apply our strategies. See, studying is one thing, and writing the examination, studying for the examination, it's a completely different ball game. Okay, first studying the subject, that is what we are going to focus on. The second one is that studying for the examination, it's a different ball game altogether. All the strategies also I'm going to tell you how to have to study for the examination, but that focus is before. Okay, before some time of your examination I will tell you how to shift your focus. But for now, forget that you have an examination. Sir, how can we forget, sir? That is what is a burden in our head. First remove that burden. Okay, everyone, what you can do is that you can just take that burden and you can remove it. Hey, be a kid, pa. In your house, people will be thinking that, pa, my son has become loose. He is just doing some actions. Okay, don't worry. Don't worry. Okay, remove your burden. Everyone, you can just remove your burden and throw it away. For now, there is no burden that you are having in your head. That examination burden and all you remove. First, we are going to study the subject for fun. We are going to study the subject. We are going to enjoy the subject. We are going to enjoy the concepts. That is what is our first priority in our classroom. That is how I want my classroom to be, or I want my students' approach to be with me. We are going to, so for now, okay, for now, these pattern and all, okay, this pattern and all, I am not going to see this pattern and all, okay, how much marks, what is MCQ, descriptive, which chapter is important, which is not important, okay, lot of things. This is not school. In school, whenever we study, we will ask our teacher, ma'am, important sums, ma'am, okay. Here, no important sums and all. Every chapter, every concept is important for our classroom discussion. Then slowly we are going to move towards the strategy of how to prepare the examination. That is towards the end. See, I will tell you something about myself. I was an average student in classroom. Average means in terms of marks. So if you see my quarterly marks, half yearly marks, midterm marks, I used to get 50-60% marks, 50-60, sometimes 65, sometimes 70. So that is how my marks will range. Okay, 50, sometimes even just pass. Sometimes I will be getting 40, 45. 2 or 3 times I got failed also. Okay, 10th, 11th, 12th. That is how my schools will be in my schooling time. But when it comes to final examination, I scored 95%. So 10th standard public examination, I scored 95%. Okay, the highest marks I got in mathematics. 12th standard public examination, I got 95% again, school topper. So I am not boasting myself and all, I am just telling. But if you see my previous marks and all, it is all average. But when it comes to examination, I know how to perform. That was my attitude in my school time, all because of some strategies. Okay, because examination, scoring, marks, these are strategies. So that's why I tell, studying is one thing, learning is one thing, and studying for the examination is a separate ball game altogether. And we are going to be expert and masters in both. That is what is our ultimate aim, pa. Are you all with me again? Checking you're not sleeping, pa. Are you all with me? Comment, yes, sir. Super. Super. See, the same excitement I will be having till the end of the batch. Don't worry. The same excitement I will be having. I will not be coming, let us start, okay. This is not my attitude of teaching. I will come with the same excitement. I will teach each and every topic with the same enjoyment level. And I also want that level of excitement from you. See, I know that in online it becomes little bit difficult to connect. If you guys are face to face, I can slap you. Not literally, I mean, hey, you guys understand my emotions and all, slowly you will understand, okay. I emote a lot. So I can even slap you and I can make you understand and I can make you enjoy the subject. But when it is online, I cannot come out of your screen, hey, come here, like that. But I will try my best, okay, to make you, stick to the subject and make you enjoy the subject. That is how, we are going to proceed with our classes. So pattern for the examination not required. Why, sir? We are enjoying the subject. Okay. Again, these are the weightages and the patterns. First, we will just know what is our scope before entering, okay, or before playing any game. You should be knowing the rules of the games, right? So adhe marida, these are all like called as the rules of the game. Okay, what all you are going to study. Financial management is an ocean. Finance is the subject, right? It is an ocean in itself. Okay, so these are all the topics. Sir, from where you are taking, sir? You guys will be having some book that is called as study material. I know that you would have received or you would have ordered yet not received, but there is something called as a study material. I always say that your first source of knowledge should be your study material. First, for the examination, your first thing will be study material. Again, you guys will be thinking that, sir, we are having a lot of mistakes in our study material, pa. Okay, I agree. Okay, your CMA study material, you are having a lot of mistakes and all, but you have to live with it. Okay, we have to live with it. We should not tell bad words and all, okay, but live with it. Okay, there are some mistakes, it's okay. We are assuming that slowly those mistakes will rectify in the coming edition. The same thing I say again and again, but not rectifying, but still hope is the best way, okay. So we are hoping that slowly the mistakes will be rectified. See, the portion is awesome. What you're going to study, right? The portion, the mutual funds, portfolio, asset pricing theories, adala are awesome. Lot of things are there in the study material. The coverage is superb, but the way in which it is, described, little bit half-assed it is. But don't worry, that is where a classroom discussion is going to help you all, where I am going to structure it for you and then I'm going to present it. See, I'm like a performer, pa. I'm coming to you, this is the subject, I'm structuring it, and then I am giving you in a platter so that you guys can easily understand. That is what is my job. And what is your job? To eat, pa. I mean to enjoy. Okay, for now it's all about enjoyment. When you're going into a restaurant, what you're going to do? You're not eating to fill your tummy. If you want to fill your tummy, you can go home and you can eat, but you want to enjoy. That's the reason you're going, right? Fancy restaurants and all you're going, I want to eat double tower burger, triple tower burger, 4 tower burger and all. Why? Just, okay, for the sake of enjoyment, or sometimes for the sake of show of snap. I'm never in Snapchat and all, but slowly I'm getting to know people are moving from Instagram to Snapchat now. Starting like it was Facebook, everyone was in Facebook. Slowly all converted into Instagram. Now slowly all are converted into Snapchat. Probably after Snapchat something new will come up, or probably it has come, I am not aware. Is there something after Snapchat that you guys are using? Comment le sollu. I want to know whether, so that I can also update my knowledge, refresh. Response is my expectation. Follow my expectations. But there is some 90s kid, pa. He's saying, as a 90s kid, I stay away from Snap. I am also staying away from, I don't know what is Snap itself. My sister will be keep using some snaps and all. Slowly I get to know that Snap is all about taking photos, because the filter system is very nice in Snap. But that is replaceable. Okay. Now, if you are sitting in a final class, I'm having a preconceived notion that you have completed and studied your inter. I repeat again. If you are sitting in a final class, I am having a preconceived notion that you have studied and completed your inter. Correct? My notion is correct? எவ்வளவு கஷ்டப்பட்டு you have completed your inter. You should tell with joy, yes sir. Super. Now, if you have studied your inter, I am having a preconceived notion that you have also studied investment decisions. Say yes or no. Again, my notion is correct? Super. Wow. So you know, which means you have studied investment decision. There is some chapter called as investment decision in inter. Now this chapter is not even sparing you in final. This chapter is just sticking with you in final also. It's the same thing in a different box with some more advanced concept in investment decision. Okay. Now everyone, now if you know or if you have studied investment decision, which means I'm having a preconceived notion that you know what is time value of money. First say yes, no. You know what is time value of money. Whether my notion is correct or not, my dear Chalakutis. If you don't know, tell me no. Okay, I will not tell you're stupid and all. I like stupid people also. Time value of money. Hearing for your responses. Oh, one person is telling all forgotten. No sir, no sir. Yeah. Okay, I know that this will happen. Time value of money, sir. What, sir? Time value of money. Foundation, inter, sir. No, sir. See, now let me tell you, time value of money is the main core of finance. The entire subject of finance is built around the concept of time value of money. Okay, it is called as TVM, time value of money. The entire, all the concepts of finance are built around the concept of time value of money. If you see investment decision, security analysis, financial risk management, international financial risk management, everywhere there is application of time value of money, each and every chapter. So time value of money is the mother for you all. For finance, time value of money is the most important source. It is like water for the subject. If the subject is a juice, now time value of money is like water, and all the subjects are flavors. So water is the base. Time value of money is the base for all the chapters that you're going to see in financial management. Okay, so you don't worry. Okay, I always start my class thinking that all my students are muttal. Sir, muttal. Okay, for me, all of you are muttal. You don't know anything. Zero. Aprida, I think LKG students. Sir, zero. I don't know anything. Like that only I think, and then I'm starting my class. Are you all with me? Are you guys muttal? You can tell yes, pass. Okay. Outside you don't tell. Okay. Outside you don't tell that you guys are muttal and all. Okay. Inside, in the classroom. Okay. In the classroom, you guys are muttal for me only. Okay. Outside you guys are super professionals. Okay. Whenever you go out, sir, professional, sir. I know everything. Okay. But in the classroom, always be a sir. Nothing I know, sir. Okay. Muttal. Zero. From zero, how to become hero? Ah, super rhyming. From zero, how to become hero. That is what, okay, this classroom is all about. Are you all with me, my dear Chalakutis? So the transformation of zero to hero is something that we are going to see. You know, this professionals and all, chartered accountants, cost accountants, company secretaries, okay, all these are professional courses. So whenever we hear this word professional, people will be eyeing for respect. Correct? If you see some chartered accountant, if you see, sir, I'm a cost accountant, or I'm a company secretary, I'm a doctor, okay, I'm a lawyer. So if you see professionals and all, people will be eyeing them for respect. If you're telling that, yeah, I'm this, people will be saying, pa, Periyal. That is how the society will be seeing you. In the classroom, our teacher will be seeing you is that Muttal. Okay, everyone don't know anything. Okay, coming, and then slowly, we will be gaining the knowledge. We will be gaining all the knowledge. Outside, you have to show that you know everything. Okay, this is the trick. Even though when I was a student, right, when I go into some functions and all, people will be asking, Pa, what do you think about the stock market, Pa? Something I will tell, Pa, okay, Pa? Though I will not know anything, something I will tell when I was a student. Something. Ah, yeah, this has happened, something, this news has happened, yeah. So I am thinking that the market will correct a bit and then it will increase and then it will correct. Something I will tell. People will be in awe, Pa, super. Your level of knowledge is great. Okay. But my teacher will know that what level of knowledge that I was having. Same thing. Okay. Outside you have to show super. In the classroom, I know your reality, Pa. Okay, I know. ஒண்ணுமே தெரியாது. Just we are coming to the classroom, we are learning. Hey, now I know, Pa. Okay, now I know. Now if you ask me how the stock market is, I will tell, Pa. Okay, it will increase a bit. Then wars and all are happening. Okay, then it will decrease. It's all about, okay, it's all about how you show. Okay, leaving all things aside, okay, you don't tell this outside and all, okay, Pa. I used to do these things and all. I have huge respect in my within my relatives and all. I hope my relatives don't see this. Coming back. So the entire chapters, all the chapters are built around the concept of time value of money. Repeat with me, time value of money. I know that people around you will be sleeping. If I tell time value of money, they'll be like, time aicha. But no, you guys are studying the concept. Okay, time value of money. Now, so just a moment. Let me tell you, okay, what is time value of money slowly. Okay, I will just start this subject, or I will just start with time value of money. And let me tell you, this time value of money, though you don't know, it is a foundation level subject topic of time value of money. It is a foundation level topic. Or had you gone to college, fortunately or unfortunately, if you studied in college, you would have heard something called as time value of money. Or no, you have studied foundation, you would have heard something called as time value of money. Then in Inter also, there is a chapter called as time value of money. I know that you guys have forgotten, okay? So what I'm going to do is that let us brush. In the morning we have to brush, right? So we are going to brush the topics, and slowly we are going to build our discussion, and we are going to enter and transform in final. First, on the LKG level brushing we are going to do. Are you all with me? Say yes, no. If you say yes, I'm going to tuck in a start. Super. Sujita, Santana, Yuvraj. Great. Great. Okay. Now, see, time value of money. This subject is all about money. The subject finance is all about money. That is what is the first thing that I want to tell you. Wherever we talk about money, their financial management will come. So this is the most practical subject of all the subjects that your guys are having. Sir, why you are telling practical, sir? You know, people are having different understanding. People will think that practical means problems. No. Practical subject means the subject that you can use in practice. So in that notion, all the subjects are practical. Guys are understanding, you know, practical means that you can use in practice. But this subject is very much practical, that whatever you are going to study, you can directly use it after the classroom. Because where money is not used, correct? Money is there everywhere. From the tip of the pen to the zip, everything is having money. Correct? You would have heard this dialogue somewhere. So everywhere, okay, everywhere you are having money. Money is in everywhere. You're drinking water, money. You're seeing this classroom, money is involved. I'm using this, you know, iPad, money is involved. Cameras are here, lights are here, system is here, a classroom, table, chair, calculator, okay. Everything comes for money. Everywhere the money is involved, the transaction of money is involved. Clarity? So, this subject, finance, you can use it everywhere. Why? Because money is used everywhere. So, that's the reason I say that this is the most practical subject that you're going to see. Starting, you all will feel little bit slow, okay? The starting of the class will always be slow. But you have to trust the faculty as and when we build the discussion, right? The enjoyment level will be more. You all will be saying, sir, more sir, super sir, okay? So that is what is the reaction that I want from you. So in the start, be with me. So this is a journey, okay? It's a bit a long journey. So you all be with me. Each and everything will be worth it. Each and everything that we are discussing, I will not even waste your, you know, even 1 minute of your time in discussing irrelevant things and all. I'll be discussing relevant, little bit here or there, irrelevant will be there, okay? But it will not be completely irrelevant and all. So you can trust me. You guys are giving your money and time to me, and I am giving you the most invaluable knowledge to you. It is a transaction, okay? It is a little bit unequal transaction. Knowledge cannot be compensated with money, but it is compensated by the time that you're investing. More than money, your investment more is time. Time is something that is more important. Are you all with me? அதனால தான் நான் சொல்றேன் time. Sir, everyone, time is more important. Time is the essence. Now everyone, just understand. Sir, when we are talking about time value of money, what does it mean? See, finance is all about money. Correct? Now, when we talk about money, money can be in past tense also, money can be in present tense also, and money can be in future tense also. Correct? There is something called as past, there is something called as present, and there is something called as future. English class, no. I'm talking about when we talk about money. Either I have money now, that is called as present. So that value of money is called as present value. Correct? Or I'm going to receive money in the future. For example, I'm starting a business. Then after 1 year, I'm going to have a sale of 1 lakh rupees. So that 1 lakh rupees is called as future value. Why? Because it is going to happen in the future. Correct? And something that has happened already, it is called as past value. Okay? Something that is already happened is irrelevant in financial management. Sir, it is irrelevant. we are not going to see what has happened. Adala accounts la padikkanum. That is all you are going to see in accounts. That's the reason I say that first everything will happen. Sales will happen, purchase will happen, expenses will happen, profit will be earned. Then the year will be completed 31st March. Then after the year is completed, then you are going to sit and analyze what is your sales, what is your purchase, what is your expense, what is your this. Then you are going to calculate the profit, and then you are going to report the profit, something that is already done. So accounting is like post-mortem, something which is dead, correct? Past numbers and all are dead numbers. Dead. Past means what? Dead. Everything is completed. Now you are going and seeing, okay, what is your profit? Okay, how much is your profit? Everything that you're going right. So analyzing past numbers or dead numbers, it is called as accounting. Sir, yes, don't tell to accounts faculty and all, okay, he will hurt. But it is all a secret between you and me. Are you guys with me? Yes, no, response, secret. Tell me that yes, you will keep this secret. So, what is financial management, sir? Financial management is all about analyzing the future numbers. See, which doctor will be paid more? A doctor who is doing post-mortem, or a doctor who is treating live patients? Live patients are post-mortem. Who will be paid more? Tell me, who is more valuable? Post-mortem or live patients? See, of course, definitely live patients. Are you all with me? So, financial management is like you are analyzing the live, what is happening, or you are analyzing the future, what is going to happen. That is the reason financial management is more vast. There is no standards for financial management. In accounting, you are having standards, correct? Accounting standards, correct? International Financial Reporting Standards, IND-AS, okay? IND-AS, which is the international standards adopted. And then you are having accounting standards. So you are having standards. Why? Because everything is completed. Now how we have to see, there are some standards, there are some rules. Based on that, you just reported. In financial management, there is no standards. Okay, there is no standards. Everyone has a free hand to do whatever you want. That's the reason, the subject becomes very interesting. Because anyone can do in any method. There is no set method. When you're calculating ratios, there is no 1 ratio, 2 ratio, 3 ratio. You can tomorrow invent your own ratio also. Anything that is helpful for the business comes under finance. Any ratio that comes under that ratio. So here the ratio analysis is not, okay, here if you're studying ratio analysis, here the ratio analysis is not the set ratios, or no one is defining ratios and all. People calculate the ratios in their own. A service company will have their own different ratios. A manufacturing company will have their own different ratios. Correct? Every company will be having. If you are seeing the online YouTubes and all, they will be using their own ratios. ROAS, return on advertising spend. Okay, this and all you are not even studying, but these are the ratios that is used. Correct? Return on advertising. Per advertisement spend, how much return I am getting. Correct? Or they will be using that, if THARUN'S Brainery, if we want to calculate ratios for THARUN'S Brainery, we will see the virality ratios, okay, which video is viral, okay, or how much views is one of the ratios, or views per minute, views per hour, okay, lot of ratios are there if you see YouTube analytics and all. Now these are also called ratios. What is ratios? Comparison between two numbers, that is what is ratios. So in accounting we have set standards, like these are the blah 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 ratios that you have to report. In financial management, there is no set thing, there is no standard. You guys are set free. This is a subject where we have no boundaries, where we have no limits. Nothing is there. Whatever you want, you can do. But that should make sense. Okay, it doesn't mean that you will calculate some absurd ratios and all. So creditor to debtor ratio. Okay, no sense. So anything that makes sense, that is what you're going to, see in financial management. Come on, are you all with me? Are you guys with me? Yeah, I'll be asking you again and again why, because you guys are not in front of me. I'm seeing dabbas only. So, okay, online students, I'm telling this to online students. So I want that you guys should not sleep and all. I know, pa, morning, 6:30 a.m. Sir, we are sacrificing the sleep and then we are coming. Don't worry. Every sacrifice will be worth it. Okay. Each and every drop of sweat will be worth it. Though you're not sweating. Okay. Let us come back. So, this past value and all are accounts. We are not going to see. Okay, sir. So, when we talk about money, it is money today or money tomorrow. Okay. Now, whenever, if you remember, we are having, something, in investment decision, you would have studied something called as cash flows. Any business we have to analyze from the cash flows, and cash flows are written like this. Here, cash flows. Any business, first you will make some investment and then you are going to get some return, correct? So let us say investment will always you will make today. We are seeing from today's terms. So investment we are going to make today. So today in a year 0. So year 0 you are investing 100 rupees. Let us say year 1 you are getting 200 rupees. Okay, it is very much high. So year 1 you are getting 20 rupees. Year 2 you are getting 30 rupees. Year 3 you are getting 40 rupees. And year 4 you are getting 50 rupees. This is one of the project. Okay, let us say that this is some business. In some business, 0th year you have to invest 100 rupees. And first year you will get 20. Second year you will get 30. Third year you will get 40. And fourth year you will get 50. Now someone is asking, pa, whether you have to do this business or not. See, you guys are not relating, but in reality, businesses are like this only. Businesses are always defined in cash flows. You will be given, think in terms of crores. Sir, 0th year, sir, it's a 100 crore project. 0th year, you invest 100 crores, sir. First year, since the market is just started, you will get 20 crores, sir, cash flow. Second year, you will get 30 crores, sir. Third year, you will get 40 crores, sir. And fourth year, you will get 50 crores. Super project, pa. This is called as proposal. Not marriage proposal, but investment proposal. Okay, someone is giving you an investment proposal with a set of cash flows. Like these are the set of cash flows, and this is the investment proposal that you are having in front of you. Year and cash flow. Now, someone is asking you whether I should accept this project or I have to reject this project. What will a layman think? A layman will think, pa, sir, 0th year you 100 rupees potrikkinga. You have invested 100 rupees. First year I am getting 20. Second year I am getting 30. Sir, I got 50 rupees. Third year I am getting 40. Fourth year I am getting 50. Total how much I am getting? Total how much is my inflows? 50, 100 and 140 rupees I am getting. Correct? 140 rupees I am getting. Sir, you have invested 100 rupees, sir. You are getting 140 rupees, sir. It's a 40% return. Accept. Correct? A layman will think. Now you all tell me, is this correct or wrong? 40% return. Super. Is this correct or wrong? Tell me, pa, correct or wrong? See, our friend Sandana is telling it's no, sir. Wrong, sir. You are wrong, sir. Others, correct, wrong, or don't know? Okay. So, you guys are understanding, right? How a layman will think that, sir, 0th year you have invested 100 rupees. So in 4 years you are getting 140 rupees. So 100 rupees invested, which means 100 rupees gone out of the pocket. 140 rupees came inside my pocket. So 40 rupees came extra in my pocket. So that is the reason 40% return. Accept. See, I'm seeing in the comment box, your intuition is telling, someone is telling calculate PV. Your intuition is telling, okay. But for now, okay, sir, 40%, you know that something wrong. Now, let me just give you year cash flow. Year 1 is 20. Year 2 is 30. Year 3 is 40. And year 4 is 50. Tell me what is the total. Everyone tell me what is the total. Can we add? Tell me. A simple mathematics pa. 140. 140. Correct? Wrong. Muttal. If you are adding different year cash flows, it is muttaltanam. Sir, you cannot add different year cash flows. The value of this 20 rupees is different than the value of this 30 rupees. The value of this 40 rupees is different. The value of this 50 rupees is different. You cannot even add different cash flows. Sir, you only told to add, sir. But you cannot add. Okay? Not possible. You cannot add different year cash flows. Are you guys understanding the problem? You cannot add different year cash flows. Are you all with me? Are you guys understanding where we are heading to? Okay, sir. We cannot add cash flows. Sorry. I am not putting years now. Okay, va? 100 rupees, 200 rupees, and then 400 rupees. Add and tell me what is the amount. Hey, no years and all. Okay, you can add. How much? 700. Now I'm giving you one more information. This is rupees 100, dollar 200, and pound 400. Now tell me, is it 700? Is this 700? No. Why this is not 700? Because, sir, the value of this is different. The value of this is different, and the value of this is different, so you cannot add. The same thing applies here. The value of this cash flow is different. The value of this cash flow is different. The value of this cash flow is different, and the value of this cash flow is different. That's the reason you cannot add these cash flows. You cannot add these cash flows because the value of these three cash flows are different, so we cannot add. Sir, how we can add? I have to get all the three in the same value first. I have to value it in rupees. For example, $1 is equal to 80 rupees and 1 pound is equal to 100 rupees. Aprina, rupees 100 will be 100. How much will be dollars? 200 into 80 is how much? 16,000. Correct? And 400 into 100 is how much? 40,000. Now tell me what is the total? Everyone tell me what is the total? 56,100. Now please tell me, can I add these three numbers? Yes, no? Yes. Correct? This 56,100 is the correct answer. Sir, why we are adding this, sir? How we can add this? Because now every value is in rupee. Now, because all the values are in rupees, I can add. So which means what I have to do is that I have to bring this cash flow to some value. And if I bring the cash flow to a common value, only then I will add. And that value is called as present value. So these are all future cash flows. Everyone understand? Slowly I'm opening your brains. Sir, these values are called as future cash flows. Why, sir, these are called as future cash flows? Because at the end of year 1, I'm going to receive 20. How we have to interpret this? Okay, if I'm telling year and cash flow, if I'm telling year 1 20, how we have to interpret this number? At the end of the first year, there will be an inflow of 20 rupees because this is positive, right? So positive na inflow and negative means outflow. Okay, it is not profit and losses. We are talking in terms of cash flows. Okay, we are talking in terms of cash flow. So if it is positive, it is inflow, and if it is negative, it is outflow. Why? Because we are talking in terms of cash flows. Okay, so which means, sir, if I am telling year 1 20 rupees, the meaning is that at the end of year 1 I am going to receive 20 rupees. Okay, at the end of year 1 there will be an inflow of 20 rupees. That is how we are going to interpret. Sir, at the end of year 1, now if I am writing 230, na, at the end of year 2 I am going to having an inflow of 30 rupees. 340, na, at the end of year 3 I am going to having an inflow of 40. 450, na, at the end of 4th year I am going to have an inflow of 50. Now in question, twist will be there. At the beginning of 2nd year they will be telling like that. At the beginning of 2nd year you will receive this cash flow. Now you should be knowing beginning of 2nd is same as end of 1st year. So you can write it in 1. If someone is telling you question like at the end, okay, at the end of 2nd year we will have inflow of 30 rupees. Abdina, how you have to write? How you have to write in investment decision terms, year cash flow. You know, this is how the format. So this is how you have to interpret the number as a financial manager. So year 2 I am going to have 30. That is how you are going to write this. Okay, wow. Similarly, if someone is telling you at the beginning of year 2 we will have inflow of 30 rupees. How you are going to write this? Okay, how you are going to write this? Year and cash flow. Everyone tell me how you are going to write this. At the beginning of year 2 we will have inflow of 30. Up in the year what? Which year? Year 2 year 2, year 3, year 0. Everyone tell me, pa. Everyone. See, someone is telling year 3. At the beginning of year 2, na, year 2 at the beginning is nothing but end of 1st year. Understanding? 31st December is the end of the year. And 1st January is the beginning of the year. In mathematics, okay, so in financial management terms, both are same only, 1 day only is the difference. So at the beginning of year 2 can also be written as end of year 1. So beginning of year 2 means what? 1st January 2. Just an assumption, okay. Year 2 means let us keep it as 2022. So 1st January 2022 is equivalent to 31st December 2022. Sorry, 21. So that's the reason I'm writing 130. How many of you are having this clarity? How many of you are understanding this? Please, or a clap emoji put. Everyone clap. They're giving you this much exercises and all. Everyone, I want to see that clap emoji in front of me. You guys should appreciate if you guys are learning something. Super. We are having virtual claps here, pa. Had it been a face-to-face, real claps will be there. Super. I hope you guys are having. See, we should be having this much clarity and all. If you're having this much clarity, slowly, we will move our discussion ahead. Okay, sir. So now we are just trying to understand the interpretation. Okay, sir. So different values determines different cash flows in different years. I just told you how to interpret these numbers. Now let us come. Okay, let us come. Year cash flow. Year 0 invested 100. Year 1 I received 20. Year 2 I received 30. Year 3 I received 40. And year 4 I received 50. So till now I know that I cannot add here. Okay, I cannot add here 40. This is something that I cannot do. If you're doing mathematically, financial management, we are also having something called as financial mathematics. So financial mathematics says that this is wrong. Okay, this is wrong. Probably your elementary school mathematics will say that this is right. What, sir, adding all these numbers is coming to 40 only now. Okay, but financial mathematics say that it is wrong. Why it is wrong? Sir, because all these are different year cash flows. So what? Different year cash flow means what, sir? So what? Different year cash flow means that the value of these cash flows are different. See, now we are just starting. The value of the cash flow are different. Now the question comes, why? Why the value of the cash flows are different? Okay, everyone properly understand why the value of the cash flows are different. Now, let's say for an example, okay, I'm giving you an example. You are having two options in front of me, okay, you think I'm giving you options. You are having two options in front of me. Either you take 1 lakh rupees now. Okay, either you take 1 lakh rupees now, or you take 1 lakh rupees on 1st January 2027. Okay, I am giving you two options in front of you. Either you take 1 lakh rupees now, or you take 1 lakh rupees on 1st January 2027. Now you all tell me about which option you are going to choose. Which option you are going to choose? So Santan is telling now. Others? Now or on 1st January, later, now or afterwards, 1st January 2027. Response, my dear Chalakutis. That's the bare minimum expectation I'm having. Everyone is telling now. Why, pa? The value is same only, na? 1 lakh, 1 lakh. Is the value same? Tell me, is the value same? Everyone, is the value same? It looks same, but it is not. It looks like this is also 1 lakh, this is also 1 lakh. Okay, but the value is not same. 1 lakh rupees today is not equal to 1 lakh rupees after 1 year. Okay, 1 lakh rupees today. Now I will just change this to after 1 year. Okay, I will just change this to after 1 year. So 1 lakh rupees today is not equal to 1 lakh rupees afterwards. Now, which means, sir, the value of this 1 lakh is not equal to value of this 1 lakh, which means that there is a difference in value because of time. There is a difference in value of money. The difference in value of money because of time. Correct? There is some difference in value of money because of time is called as time value of money. Super. Everyone understanding? If you're understanding, I want a clap emoji. Appa, sir, the difference in value of money because of time is called as time value of money. Everyone. Everyone, are you guys having 100% clarity? Or a clap emoji, I want everyone. Sir, first day first day you could have told, sir, the difference in value of money because of time, but you will not have this clarity. Like, okay, sir, difference. What is time value of money, sir? Difference in value of money because of time. You should be understanding, or you should be having the feeling, that guarantee you should be having. Okay, so the value of 1 lakh today is not equal to 1 lakh after 1 year. So the difference in this value is called as time value of money. And time value of money is always expressed in percentage. Okay, it's called as term. So is time value of money, it is always expressed in percentage. It is always expressed in percentage. So let us say, and okay, in financial mathematics, always the value keeps on decreasing. So the money today is more valuable than money tomorrow. Okay, ba? Basically, time value of money is also called as the money today. Money today is more valuable than money tomorrow. Than money tomorrow. So today's money is more valuable than money is tomorrow. It means what? The value of the money decreases over time. That is what is the meaning, correct? The value of money decreases over time. And this difference in value is called as time value of money. Correct? And this difference in value is called as time value of money. I'm just giving you a different interpretation of time value of money. Okay. You all will be having a question, sir, why it is decreasing, why it is not increasing and all. I'll tell you, okay, we will be telling you all these things. Okay. So let us assume for now that after 1 year, the value of this 1 lakh is equivalent to 90,000. Okay, it is equivalent to 90,000. Okay, it is equivalent to 90,000. Now both become same. Correct? Now both become same. Okay, sir. Today I will give you 1 lakh. Today's value is more valuable. So if I see this 90,000, this is in today's terms. Okay, this is in today's terms. Okay, this is in today's terms. Because today if I give you 90,000 rupees, that after 1 year will become 1 lakh rupees. Okay, that after 1 year will become 1 lakh rupees. Let us say the interest rate is 11%, right? So 90 plus 11% if you do, right? 90 plus 11%, you will get 1 lakh. Okay, 90,000 plus 11% if you do. So this difference is called as 10,000, right? This 10,000 is actually 11%. Okay, 10,000 divided by 90,000 into 100. That is what is 11%, and that is what is called as time value of money. So the difference in value, it is expressed in percentage. Okay, this is the first level explanation. Still, it is not completed. I am just explaining you. Once you are having very good absolute level of clarity, right, then you will be understanding all the subjects. So time value of money is the base. So be with me. Okay, be with me. Slowly, if you understand time value of money, you will understand investment decision. If you understand investment decision, you will understand that how the the cost of capital and everything works. Once you understand that, you will understand how is risk management, how to do international financial management. Once you understand that, you will understand the risk return, everything you will understand. So time value of money you understand now, everything you understand, right? Isko laga dala to life jinga lala. Now, okay. Slowly, okay, slowly we are all moving. I hope you guys are enjoying. Okay, okay, sir. So now 1 lakh, and after 1 year, the value of this 1 lakh keeps on decreasing. Now the question comes, sir, now 1 lakh, and after 1 year 1 lakh, everyone will be choosing now 1 lakh, and they will not be choosing after 1 year 1 lakh. Now a layman question. A child is coming here, okay, a 3-year kid is standing in sitting in front of me, and he will be telling that, sir, now also you are giving 1 lakh. After 1 year also you are giving 1 lakh. Both are same only. Why people are choosing now? Now I am going to give you an answer. See, this is called as 1 lakh is called as present value. Now means present. And after 1 year 1 lakh, this is called as future value. Whenever we talk about future cash flows, okay, this is called as future cash flows. Whenever we talk about future cash flows, we have some element involved. Okay, we have some element involved. The first element is that there is something called as interest rate, or there is something called as inflation. Whenever we are having interest rate, okay, interest rate is nothing but inflation. Based on inflation only interest rates are changing. Okay, so we are having inflation, which means before 1 year, okay, before 1 year, I'm telling, or let me tell you my school days when I was in school. Okay, there I am having one weakness. Pani puri is my weakness. Wherever I see pani puri, I will just stand and I will eat. Okay, so in my school time, ₹10, I'm going to get 6 pani puris. Okay, but 10 rupees I was getting 6 pani puris. Today, okay, and this is about, let us say that 2015, okay, in 2015, 10 rupees I was getting 6 pani puris. Today, in 2025, in 30 rupees, we are getting 6 pani puris. Okay, today when I'm going outside and when I'm eating pani puri, it is about 20 rupees, 25 rupees, or 30 rupees. Okay, so let's keep it 30 rupees, a good pani puri. So 30 rupees, 6 pani puris. Hey, are you all agreeing? This pani puri thing and all. Hey, agreeing? Or I'm living in some different world. Correct? 30 rupees for 6 pani puri. I hope we both are in the same world for you to understand this example. If someone will tell, sorry, a village pakadala patra pata pani puri pa. Hey, you tell me, I will come to the village. In my grandmother's village and all, 10 rupee 10 pani puri I was having in 2015. But in Chennai, it was 6 only. So in 2025, when we come, 30 rupees 6 pani puri. What is the cost of per pani puri? Okay, rupee per pani puri. What is the cost of per pani puri in 2015? Please tell me. Per pani puri. Or pani puri, how much is one pani puri here? Sir, 1.67 rupees one pani puri. Which means I'm eating one pani puri, I'm spending 1.67 rupees. And what is the cost of per pani puri in 2025? Everyone tell me. It is 3 rupees. Correct? 30 divided by 6. If you guys are not under A, 5 rupees danaba. It is 5 rupees. 30 divided by 6. It is 5 rupees. 1.67 into 3, tripled. Correct? The price is tripled. It is 5 rupees. Are you guys are understanding? So today, when I'm going outside, when I'm eating one pani puri, it is like I have ate 5 rupees. I've spent 5 rupees. One pani puri, 5 rupees. Correct? Now, how much pani puri per rupee? Everyone understand, because we are want to understand the value of rupee in terms of pani puri. Okay, in terms of pani puri. So, value of 1 minute. So, everyone tell me, how much pani puri per rupee in 2015? Please tell me, how much pani puri per rupee? In 1 rupee, how much pani puri I will get in 2015? It is 6 by 10. Are you guys understanding what I'm trying to tell? So, which means 0.6. Okay, 0.6 pani puri I'm getting per rupee. Which means, sir, in 2015, if I will give 1 rupee, he will give me 0.6 pani puri. Padi saapte tarva. No, I'm just telling, okay, mathematically. So 0.6 pani puri I will get in 1 rupee. Because I'm seeing value of this 1 rupee. So in 1 rupee, what value I get? 0.6 pani puri is the value. Understand in terms of value, okay? This pani puri is nothing, it's a term of value. So now you see, sir, previously in 1 rupee, I am going to get 0.66 value. Sorry, 0.6 value of pani puri. So pani puri is like value, utility, correct? That that utility that I'm getting, which is 0.6. Sir, today, 2025, how much Pani Puri I'm getting per rupee? Everyone tell me. 0.2. 0.2. So if you are seeing here, so when you are seeing here, what is happening? Your value is reducing. Correct? Your utility is reducing. Everyone understand? Your utilities are reducing. So this is future cash flow. The cash flow is increasing. The cash flow is increasing. Sorry. The cash flow is increasing, but the value is decreasing. Everyone, are you guys are understanding? That is why I am telling that the value is decreasing. Sir, why the value of money is decreasing? Because this is what is the value of money, correct? This is the value of Pani Puri. And this is the value of money or value of 1 rupee. So previously in 2015, my value of 1 rupee was 0.6 Pani Puri. Today, my value of 1 rupee is 0.2 Pani Puri. It means my value of money is reducing. Sir, why my value of money is reducing? My value of money is reducing because the price of Pani Puri is increasing. This is called as price of value of Pani Puri means what? Price of Pani Puri. Correct? And why it is increasing? Because my price increasing. Sir, why my price is increasing? Because of an economic concept of inflation. Are you guys with me? Everyone, if you guys are understanding, you can give a clap. If you guys are understanding this, you can have a clap. Okay, sir, my value of money is decreasing because my price is increasing. Why my price is increasing? Because of inflation. Inflation meaning is increase in price. That is what is the meaning of inflation. Everyone, why? Some clap I deserve, right? If you guys are understanding this much with clarity. Yeah, I want everyone. Good morning. Good morning, everyone. Wake up. I will come outside. Super. Okay. Okay. So, okay, sir. So, which means you understood, sir. So, something which is happening because of inflation. Upon a time value of money exists. Time value of money is because of inflation. Slowly we are deriving, correct? So, time value of money is because of inflation. And inflation is an economic indicator, okay? Inflation is a normal economic symptom that usually the prices will increase, and when the prices will increase, the value of money will decrease, okay? Because they're printing more notes and all, right? So inflation will be there. The purchasing power of the people comes up. So when the purchasing power of people comes up, the value of money will fall down. Because the value of money will fall down, the prices will increase. Okay, it is a pure economic thing. So I'm not discussing economics and all. Okay, things will become boring and all. It is not boring actually, but okay, but I'm not discussing economics now. But when we print more notes, people will be having more money. When people will be having more money, the value of the money will fall down. When the value of the money will fall down, the prices will increase. So this phenomena is called as inflation. And inflation is always given in percentages. So let us say the inflation rate, okay, let us say the inflation rate is 10%. Let us say the inflation rate is 10%. It means that your value of the money will reduce by 10% in the future. Your value of 1 rupee, okay, so which means what, sir? Rupee 1 today, tomorrow this rupee 1 will become 0.909. Okay, va? Tomorrow this rupee 1 will become 0.9091. Sir, how, sir? 1 minus 10% is 0.9 only na. How, sir? 0.9091 and all you are telling, pa? Now understand. Okay, now understand. This is after 1 year. Now this is after 1 year. Now everyone understand. Okay, everyone understand what I'm trying to do now. Sir, today's 1 rupee, after 1 year, this will become 0.9091 if my inflation is 10%. Okay, if my inflation is 10%. So this inflation is what I call it as discounting rate. Okay, this inflation is what I call it as discounting rate for now. Okay, for now I'm just giving you some words. Okay, sir. So which means the discounting rate is 10%, or this is also called as time value of money. So here the time value of money is 10%. Okay, here the time value of money is 10%. So this 10% means 1 rupee today is equal to 0.9091 rupees after 1 year. Sir, which means 100 rupees today is equal to 90.91 rupees after 1 year. Sir, you are telling these numbers and all, but how you are arriving at these numbers is the next issue. Okay, how you are arriving at this number is the next issue. Everyone, are you guys understanding? Super. Okay, now everyone, see, now look at this. Okay, now look at this. If I am receiving 1 rupee today, if I am receiving 1 rupee today, what I am going to do? Hey, I'm really sorry. This is 1 rupee future cash flow. Okay, this is 1 rupee after 1 year. I just miscalculated. It is 1 rupee after 1 year. 100 rupees after 1 year. The today's value is 0.9091. Okay, va? Understand? Sir, 1 rupee after 1 year, the value today is 0.9091. Okay, va? And 1 rupee, 100 rupees after 1 year, the value today is 90.91. Now understand, everyone. How, sir? Okay, va? How, sir? Now everyone understand today's value. Okay, 1.90 or 90.91. Let me tell about 90.91. Sir, 90.91 you are receiving today. 90.91 you are receiving today. Now what you are going to do? You know that your interest rate is 10%. So I want to know what is the equivalent value after 1 year. So what you will do? You will go to bank. You will deposit this 90.91 rupees for 10%. So after 1 year, you will get your principal 90.91 and you will get your interest of 10% also. Okay, you will get your 10% interest. So what is 10% of 90.91? 9.09, correct? 1. Are you all with me? That is what, or you can take your calculator. 90.91 into 10%. You will get 9.091, correct? So then what is the total? The total is 90.91. Okay, 90.91 plus 9.09 is equal to 100 rupees. Understanding? And this 100 rupees is the value in year 1, and this is what is the future cash flow. This is what is the future cash flow, and this 90.91 is called as the present value. How many of you are understanding this, sir? Which means what is happening, sir? Present value into 1 plus I is equal to future value. Sir, what is present value? 90.91. Sir, what is 1 plus I, sir? This is what is, I am increasing my interest because 90.91 plus, understand, 90 plus 91. What I am actually doing? I am doing 90.91 plus 90.91 into 10 percentage is equal to 100. That is what I'm doing, right? So what I'm doing, 90.91 is common. So 90.91 into 1 plus 10 percentage is equal to 100. Mathematics, okay, mathematics, 90.91 common. So this becomes 1 and this becomes 10 percentage is equal to 100. Okay, and because this is first year, so that's the reason to the power 1. If 2 years now, then again that means also you're adding. Sir, which means what, sir? Present value, 90.91 is what? Present value into 1 plus 10 percentage is what? I. And what is this year? This is number of years is equal to what is 100? It is called as future value. So this is the golden formula that you should be knowing. Hey, you have mugged up the formula, you have understood the formula. Everyone tell me, understood the formula or mugging up the formula? Present value into 1 plus I to the power n is equal to future value. Understanding? Super. Everyone. If you're understanding what you should be doing, everyone, if you're understanding what you should be doing, super, my dear Chalakutis. So this is what is the formula, sir. Whenever you want to calculate, this is what banks will calculate. When you tell to bank, sir, okay, sir, this is called as, actually this phenomena is also called as compounding. The meaning of compounding is converting your present value into future value, because you're calculating future value, correct? You're calculating future value. So converting your present value into future value is called as compounding. This usually banks will do. Okay, well, banks is having a huge application of compounding. And the opposite of compounding is discounting. Sir, what is discounting? Converting the future value into present value. And this usually businesses will do. Okay, well, businesses will usually do discounting of the cash flows. Okay, banks will also have a huge application, but huge application is there in investment decisions, because finance managers will do. Okay, well, usually finance managers, in finance, discounting is very important. Sir, why, sir? Because in finance we'll always deals with future numbers. We always deal with future numbers, correct? We are not going to see past numbers. We are only going to see future numbers. So converting the future numbers into present value, that is what is called as discounting. Okay. Sir, appadina, you know what is compounding. Okay. You know what is discounting. Converting the present value into future value is called as compounding. Converting the future value into present value is called as discounting. Correct? This is mostly used in banking. Okay, wow? Mostly applied in banking. People tell that compounding is the 8th wonder of the world. If you understand the mathematics behind compounding, you can be the richest person in the earth. I'm not joking. I'm telling you reality. If you understand the mathematics behind compounding, you will know how money multiplies. Okay. And discounting is mostly applied in finance. Super. Now, sir, third one. Okay, well, third one. This and all will not come in examination and all. I'm just giving you so that you should be having a clarity. Sir, compounding means calculating the future value, correct? So what is the formula for future value? Future value is equal to present value into 1 plus I to the power n. Sir, discounting means what, sir? Calculating present value. So what is the formula for present value? Okay, wow. Present value means, so this 1 plus I will come down. So which means future value divided by 1 plus I to the power n. Clarity. Everyone is having this clarity. Sir, the discounting is nothing but the future value divided by 1 plus I to the power n, and compounding is nothing but future value is equal to present value into 1 plus I to the power n. You guys are understanding the formula, okay? Wow? No mug up. Super. Okay. So The fourth one, from the present value you are calculating the future value, correct? From the present value you are calculating the future value, which means 90.91. Okay, 90.91 is the present value. This you are converting in the future value. Okay, this you are converting in the future value, which is nothing but 100. Okay, which is nothing but 100. How you have calculated? Future value is equal to 90.91 into 1 plus 10 percentage. So which is nothing but 90.91 into 1.1. Okay, so what is 90.91 into 1.1? It is equal to 100 rupees. Okay, the same thing, your future value is 100 rupees. Okay, you are having 100 rupees of future value. Now this 100 rupees future value is converted into present value. Sir, what is the present value? 90.91. Sir, how you are calculating, sir? This is how we calculate. Present value is equal to future value divided by 1 plus 10 percentage to the power 1. Okay, so which means what, sir? 100 divided by 1.1. Sir, what is 100 divided by 1.1? It is equal to 90.909. So which is nothing but 90.91. How many of you are having this clarity? How many of you? Just say yes, no. Yes, no. How many of you are having this clarity? Super. Very good. So this is the base. Now this is called as time value of money. Okay, this is called as time value of money. The difference between future value and present value is called as time value of money. Now time value of money, when you are applying from present value to future value, is called as compounding. And time value of money, when you are applying from future value to present value, it is called as discounting. So time value of money is having two applications. Compounding is one application and discounting is one application. The time value of money when you're applying from present value to future value is called as compounding, and the time value of money when you're applying from future value to present value, it is called as discounting. In financial management, mostly we deal with future value. That is the reason mostly the discounting concept is used. The concept of discounting is most used in financial management. Why, sir? Why? Again, come back to this. Okay, come back to this. If you guys are understanding this, check. Okay, copy this, come here and paste this. Oh, where is the paste button? Now understand again, sir, which means what, sir? These are all the these are all the future cash flow. All these are future cash flow. I cannot add the future cash flows. Why? Because this is future cash flows for year 1, future cash flow for year 2, future cash flow for year 3, future cash flows for year 4. I cannot value. So what I should be doing? I will be calculating something called as present value. Present value means year 0. So now I will be calculating year 0 value. Year 0 value means what? This future value is converted into present value. This future value is converted into present value. Now understand, sir, how will I convert the future value into present value? Future value divided by 1 plus I to the power n. So what, sir? 20 divided by, let me say that my discounting rate is 10%. My discounting rate is 10%. So 20 divided by 1.1. Again 30 divided by 1.1 to the power 1. Sorry, to the power, this is to the power 1. This is second year, right? So to the power 2. 40 divided by 1.1 to the power 3. And 50 divided by 1.1 to the power 4. Clarity? Now please tell me what is 20 divided by 1.1? Everyone, what is 20 divided by 1.1? Very good, it is 18.18. What is 30 divided by 1.1 square? So what you will be doing? You will be doing 1.1 square, correct? Which is 1.21. Then 30 divided by 1.21. What is the answer? 24.79. No. 1.1 square is 1.21, correct? So 30 divided by 1.21 is what? 24.79. Yeah, sorry. You guys are correct. Okay, 24.79. Okay, 24.79. Hey, everyone. I don't want only one person to be calculating and others to be just watching from the bed. No. You have to sit, take your calculators, take your book, and then you have to calculate. So next 1.1 cube. So 1.1 into 1.1 into 1.1, which is 1.331, correct? So I'll keep that as in m plus 40 divided by that MRC. How much I'm getting? 30.05. Correct. This is what is the present value for the third year cash flow. And what is the present value for the fourth year cash flow? Okay, well, 1.1 into 1.1 into 1.1 into 1.1, which is 1.4641. I will keep that in m plus, and then 50 divided by that MRC I will keep. How much I'm getting? The next one is 1.4651 and 50 divided by, I'm getting 34.15. Now all these are year zero cash flow. All these are year zero cash flow. Okay, well, are you guys are understanding? And now I have a short way of calculating that. Now if you understand this, year and cash flow, year 1, 2, 3, 4 and 5. Sir, cash flow 20, 30, 40, 20, 50, only till 4. Okay, 40 and 50. Now you know that this cash flow, you are multiplying with some number. Now I will call this number as present value factor at the rate 10%, because some number you are calculating, right? So that is a factor. So now I will multiply this number with some present value factor. Sir, what is present value factor? 1 divided by 1.1, 1 divided by 1.1 square, 1 divided by 1.1 cube, and 1 divided by 1.14. Okay, wow. Now how to calculate this? There is a calculated trick to do this. 1 divided by 1.1, you know. What is 1 divided by 1.1? 0.9091. Now what I have to do? 1 divided by 1.1 square. How I will do this, sir? First you will do 1.1, then into 1.1 is equal to 1.21. Then 1.21 you will keep it in memory. Then 1 divided by that memory recall and equal to, you will get that. But there is a shortcut method which is you are putting, right, 1 divided by 1.1. If you click equal to, directly you will get 0.8264. So this is nothing but it is squaring that number, because anyways this is nothing but this square only. Now 1 divided by 1. So 1 divided by 1.1 you are calculating, and that square is nothing but, because 1 square is same, divided by 1.1 square. Again equal to, if you do, it will cube. Again equal to, it will take the fourth one. Correct? Are you guys understanding? This is a shortcut, a calculated trick. Mathematically I'm just explaining you. Then again you put equal to, you will get 0.7513. Again you put equal to, you will get 0.6830. I know that everything that you already know, but understanding the concept and logic behind whatever you are studying will refresh. Now cash flow into present value factor is nothing but present value. Cash flow into, this is called as future cash flow, correct? Now the future cash flow into present value factor is called as present value. So what is 20 into 0.9091? 20 into 0.9091 is equal to 18.18. Now same numbers you will get. Okay, wow. So again 24.79, 30.05 and then 34.15. Now all these are year zero values. Now can you all please tell me, can we add this number? Can we add this number? Yes or no? Yes. Okay, wow. So tell me, what is the total? Tell me what is the total? Okay, wow. 107.17. Okay, well, this is what is the present value, or to be more specific, this is called as present value of future cash flows, 107.17 rupees. So since I cannot add this number directly, first I have to convert this future value into present value, which is called as discounting. So adanala this is also called as discounted cash flows. How many of you are understanding, sir? If you are understanding what you should be doing, so this is called as discounted cash flows. All these words you already knew. I'm just brushing those words for you. Okay, discounted cash flows. So future cash flows are discounted, and these are all called as discounted cash flows. Okay, so adanala this is also called as discounted cash inflows. So future cash inflows are converted into discounted cash inflows. Clarity? I hope you guys are having this much clarity. Super. Okay, everyone, super, very good. So sir, here cash flow, present value factor, and then the present value. I'll just give you, a pictorial representation of what is actually happening. Okay, what is actually happening. Year 1, you are getting 20 rupees. Year 2, you are getting 30 rupees. Year 3, you are getting 40 rupees. And year 5, you are getting 50 rupees. What you are actually doing is that, since you cannot add these years cash flows, so what you're doing here is that year 0. Okay, wow. Now what you're actually doing here, year 4, year 4, sorry. So year 4. So what you're actually doing, you're converting this cash flows into present value. So which means this you're bringing in 0th year. This you're bringing in 0th year. This you're bringing in 0th year. And this you're bringing in 0th year. Correct? So how you're doing? 20 divided by 1.1. Okay, wow. 30 divided by 1.1 square in a second year. 40 divided by 1.1 cube in a third year. 50 divided by 1.14. So pictorial representation. So this 20 will become 18.18. Okay, this 30 will become 24.79. This will become 30.05. And this will become 34.15. Now since all the values are falling in 0th year, I can add these cash flows, and this cash flow I will call it as discounted cash flows. So 107.17 is called as discounted cash flows. Okay, wow. Just a pictorial representation of whatever we did. The future cash flows that you're getting are being converted into present value using a concept of discounting, and this concept of discounting is elaborated at the basis time value of money, and the time value of money, the base is inflation. So inflation, because of inflation our value of money is decreasing. Because the value of the money is decreasing, there is a difference between the present value and the future value. So that is the reason we have to discount the cash flows so that we can analyze the cash flows in a better form. That is what we have learned till now. Okay, that is what we have learned till now. Now I am having an interesting $1 million question. Okay, wow. Sir, you are only telling, sir, inflation is equal to 10%. That is the reason discounting rate is equal to 10%. Okay, wow. So which is nothing but time value of money. Okay, wow. So you are only telling, sir, discounting rate is 10%. Sir, which means the 100 rupees, or which means 1 lakh rupees after 1 year, it is having a value today. How much, pa? 1 lakh rupees after 1 year is having the value today is how much? Today is having how much? Everyone please tell me. 1 lakh rupees after 1 year. Today is today the value is how much? A 90,909 pa. Understanding? 90,909 rupees. Now, if I ask you the same question now, previously I asked a question, right? Today 1 lakh rupees or after 1 year 1 lakh rupees. Everyone was telling that, sir, today. Correct? Now, if I change this question, after 1 year 1 lakh rupees or today you want 9909, or let me again give you an example. Today you want 90,000 rupees. Now, which one will you choose? Today or after 1 year? Everyone tell me, understand this properly and tell me. Now I am giving you two options. Either today you take 90,000 rupees or after 1 year you take 1 lakh rupees. What option you want, ba? Okay, ba? Today you take 90,000 rupees or after 1 year you take 1 lakh rupees. What option you want? Everyone tell me. Pasantana is telling after 1 year. Others? Today 90,000 rupees or after 1 year 1 lakh rupees. Very good, okay. So which means you guys are understanding the finance. Sir, after 1 year 1 lakh rupees, the present value of that 1 lakh rupees is actually 90,909. So 1 lakh rupees after 1 year is equivalent to 90,909 rupees today. So today if you give me 90,909 rupees, I will take it. But today when you are giving 90,000 rupees, which means I am making a loss. It's a notional loss. Understand? Sir, how you are making a loss? Just understand. Had you got 90,000 rupees today, you would have invested for 10%, and 90,000 invested at 10%. Okay, 90,000 invested at 10%, you will get 99,000 rupees. You will get 99,000 rupees after 1 year. So after 1 year, you would have gotten 99,000 rupees had you taken 90,000 rupees today. But you are getting an option of taking 1 lakh rupees after 1 year. So there is a notional loss of 10,000 rupees after 1 year. Sorry, 1,000 rupees, 99,000 and 1 lakh. So 1,000 rupees after 1 year. So what is the loss in present value terms? 1,000 divided by 1.1. Present value terms, it is 909 rupees. Clarity. Super, your understanding. So which means in the present value terms, I'm making a loss of 909 rupees. But in the actual terms, you're making a loss of 1,000 rupees after 1 year. Because had you take 90,000 rupees today, you would have invested in the bank at the rate 10%. Had you invested in the bank at the rate 10%, you would have gotten 99,000 rupees. But you have an option to take 1 lakh rupees. So 99,000 is more or 1 lakh is more? 1 lakh is more. So 1 lakh should be chosen. Or when you have to think it from the discounting way, sir, the present value of 1 lakh rupees is 90,909 rupees. So 90,909 is more or 90,000 is more? 90,909 is more. So you will take, okay, so you will take 1 lakh because 1 lakh is equivalent to 90,909. Correct? So which means you are going to choose after 1 year. Okay, you are going to choose after 1 year. Clarity. Now this phenomena is only happening because of the inflation. This phenomena is only happening because of the inflation. Now this is not the $1 million question. Okay, the $1 million question comes now. Now everyone understand. Okay, everyone understand. So now I am giving you today 1 lakh rupees and after 1 year 1 lakh rupees. You guys will tell today, correct, because of time value of money. Now I am telling that assume that there is no inflation. We are living in a world where there is no inflation. Our country is having no inflation. Okay, there are some countries where negative inflation is there, which is called as deflation. There are some countries where hyperinflation is there. If you see the countries of like Venezuela, if you see the country of Iran and all, heavy hyperinflation is there. There, for 1 lakh, 2 lakh rupees, you will get one chips packet and all. In terms of rupees, I'm telling. Okay, in terms of our rupees, in 1 lakh, 2 lakh, they are going to get, chips. I mean, in their Iranian currency. So some 1 lakh, 2 lakh Iranian currency is nothing but the value is equivalent to 1 chips. Hyperinflation. Or there are some countries which are having deflation. Very rare. Okay, very rare. Now let us take an example. Inflation itself is 0%. Now I'm giving you option, understand properly. Now I'm giving you option. Today you want 1 lakh rupees or after 1 year you want 1 lakh rupees. Which one you will choose? $1 million question. Tell me, which one will you choose? Or indifferent? Third option is indifferent. Sir, you give today or you give after 1 year. What is the difference, sir? It is indifferent. Now please tell me, today, after 1 year or indifferent? Please tell me what is the answer. Santana is telling today. Naresh is telling indifferent. Okay. So why today? If Santana is telling today, now please tell me why today? Why today? Or if Naresh you are telling indifferent, or if someone is telling indifferent, why indifferent? In no inflation, why today? Even after 1 year, you are going to get the same value. Na? No inflation. Okay, there is no inflation. 0% inflation. And I am giving you two options. Today 1 lakh rupees and after 1 year 1 lakh rupees. Which option you are going to choose? Everyone. In no inflation, so we can take any time. Appadina indifferent. Today also you take 1 lakh rupees or after 1 year also you take 1 lakh rupees. So will you take after 1 year? So person who are telling indifferent, even after 1 year is okay for you. Just tell yes or no. Even after 1 year is okay for you. Yes. Yes, yes. Okay. Okay, you guys are telling after 1 year is okay for you. Okay. Anyone who wants money today, sir, today itself I want, sir. After 1 year I'm not agreeing. Today itself I want. Anyone like that? Anyone? Today. Santana, why, sir? Why today? Why? Why? You are very adamant. Today itself I want. Hey, I want to know, this is what is called as interactive learning. We guys will ask questions and slowly we are going to learning new things. Okay, why adamant? Why today itself you want 1 lakh rupees? Why not after 1 year? Anyways, I'm not having any inflation, right? Okay. Now, everyone understand. You guys are telling after 1 year is also okay for you. Let us say you're not choosing the option today. Let us say you're choosing the option after 1 year. Sir, I will go to the bank. Bank will not give me any interest, sir. So after 1 year is also okay. Now I'm going to tell you one thing. You're choosing the option after 1 year. What if after 1 year I am not there to give you 1 lakh rupees? Understanding? Hello. What if after 1 year I am not there to give you 1 lakh rupees? Hey, which means I'm not dying. I am telling no, I will not give. Pada. Or let me come to the other way around. What if after 1 year you are not there to receive that 1 lakh rupees? Hey, are you guys are understanding? What if after 1 year I am not there to give you 1 lakh rupees? Or what if after 1 year you are not there, you died, gone, tata. Now I cannot go and give 1 lakh rupees and transfer to heaven. There is no bank account there in heaven, heaven or hell, based on whatever karma you have did. Are you guys with me? Yes, no, everyone understanding where I'm coming to? Hello. The point that I'm trying to tell here is that after 1 year is a future cash flow, and always the future cash flow will be having some risk. Sir, super understanding. Always the future cash flow will be having some risk. Sir, you're compensating for inflation is okay, sir. But I also want a compensation for the risk. For the risk compensation, I want 5%, sir. Understand? Super. Are you guys with me? Sir, inflation component is okay, sir. I want a compensation for inflation. But since future cash flow is involved, I also want a compensation for risk. Because whenever future cash flow is involved, there is always uncertainty. There is always a risk. Correct? There is a risk that tomorrow I may not give you money. Correct? Future means risk. Clarity. Are you guys are having this much clarity? If you guys are understanding what you should be doing. Hello, if you guys are understanding what you should be doing. Everyone. Super. Sir, which means the time value of money is not inflation alone. It is inflation plus risk. This is something that you understood from here. And risk is nothing but uncertainty that something may go wrong. So the compensation you are taking it today itself. So when this risk element is coming, automatically after 1 year becomes less attractive and today becomes more attractive. So whenever you have an option of today versus after 1 year, you have to include the element of risk and then you have to check. So inflation is 0%, but risk 5% is there. So apply that 5%, discount this 1 lakh rupees and see whether it is more than the risk component of this also. If it is more than that, then you choose after 1 year. But if it is not, since here both are same. So now 5% risk means this 1 lakh rupees will become less attractive. So this 1 lakh will become more attractive. So you are going to choose today itself. Okay, based on the element of risk. Why risk, sir? Because this is a risky cash flow. And this is a certain cash flow. Correct? 1 lakh today is a certain cash flow. Because today if I am giving 1 lakh, today I am giving certain. There is no risk involved. But after 1 year cash flow, it is a risky cash flow. Okay, it is a risky cash flow. That is the reason, okay, you are going to also see this. Okay, you are going to also see something called as evaluation of risky proposal for investment decision. Clarity. How many of you are having this much clarity? Okay, so evaluation of risky proposal for investment decision, because cash flows are having element of risk. So how to see the risk in the cash flow, you are going to see in this chapter. How to normally take investment decision, you are going to see in the first chapter. And third one is a different chapter in itself, which is a leasing decision. I'm just giving you an overview, okay, of the subject. And we have actually discussed the concept of time value of money today. We have discussed the concept of time value of money. We have discussed the concept of discounting. We have discussed the concept of compounding. Are you guys with me? So compounding, discounting, time value of money. We have discussed the concept of inflation and risk. Okay, a time value of money is nothing but a time value of money is formed using inflation and risk. Time value of money is nothing but discounting rate. So usually the cash flow, the evaluation of the project are being considered by discounting the cash flows, by discounting the interest rate and risk. And then we have to evaluate whether the proposal is acceptable or not. Okay, based on that only we are going to take some decisions. Okay, based on that only we are going to take some decisions. Okay, so this is something that we have discussed. Okay, this is something that we have discussed. So let us take a small 30 seconds water break. Okay, so you guys can also I presume that you are already in the bed. Stand up. If you are in the bed, stand up. I can see you from the hidden camera. Hey, you can write it in the comment bar. Till now, how is the class? Whether you're enjoying, like how is the class, how you are feeling about the class. Okay, we are just taking a small water break, so you can just write it in the comment box. How you are feeling about the class, how much comfortable you are in the class. Any criticism, like sir, if we add this, it will be okay. Or the class is too slow, too fast. Anything. I just want your feedbacks or comments or criticism. Anything. Just write it down in the comment. I'll elaborate this so that I will be understanding. Not yes, say good and all. Something elaborate. Some words of criticism or appreciation. Like how you talk to your boyfriend and girlfriend, long messages and all. Sir, you are not my boyfriend, sir. I am your boyfriend only. You guys are forgetting that in the starting we have entered into a relationship. I told you my expectations. So we have started a relationship. So now because we have started a relationship, we are committed. We are committed. Now you guys are not single, okay? You guys are committed. Committed with me. With the subject. Okay, va? So outside, if anyone is asking single or committed, what you should be telling? Yeah, others and all not rating, Yeah, I don't need spectators. Okay, va? I also need contributors. In a world of spectator, you have to be a contributor. I want everyone to write something. Super Anjana, concept clarity thought. Very good. Okay. I really enjoying your class. Thank you. Santana. Okay. It is very clear, interesting. Thank you for making learning so easy and motivating. Super. See, the level of excitement should be from both the sides. Things becomes very, things becomes very great when involvement is there in both the sides. If you guys are also getting involved and I get double involved, there is some magic which will happen. Your explanation made a big difference. Great. The only best thing is that contributors. Whatever we are learning today, you also have to be contribute. I also will contribute. That's the thing that you have to learn. Okay. Great. Great now. Come on, let's gear up. Shall we move ahead? Everyone, shall we move ahead? Say yes, 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 yes. I want yes to be shooting in the comment section. Super. Super. Now, okay. Now, sir. Now, after knowing the concept of time value of money, discounting, compounding, interpretation of how the cash flows will look like. Okay, after having all these things, now let us jump into an area that we've already learned, but we are going to build some more discussion towards it, which is investment decisions. Okay, which is investment decisions. Okay, now this is an area that you have already studied, but let me just tell you in 2 lines what is investment decision. Okay, well, what is an investment decision? I am just going to give you in 2 lines. So this investment decision means to take decision whether to invest in a project or business or asset or not. So whether to invest or not. Okay, well, it answers this question. So which means what, sir? I have to take a decision whether to invest in a project or whether to invest in a business or whether to invest in an asset or not. So this is what is investment decision. Now let me tell you a thing. In financial management, you are learning how to take decisions. In financial management, you are learning how to take decisions. So you know, right, financial management comprises of 3 types of decisions. So by investment decision, financing decision, and investment decision, financing decision, and inter concept investment decision, financing decision, and what is the third decision? Leasing up. Dividend decisions. These are the 3 types of decisions. Investment decision, financing decision, and dividend decision. Correct? We are having 3 types of decisions in financial management. We have 4 types of decision. They changed. Okay. So we are having 3 types of decisions. Okay. If something is changed in financial management, you tell me, pa. So investment decision, financing decision, and dividend decision. Okay, well, not leasing decision. Leasing is an investment decision only. What is leasing? Whether should I invest in the machinery or take a lease? It is again an investment decision only. Okay, so leasing is forming part of investment decision. That is the reason, see, leasing comes under investment decision. Okay, it is not a separate decision. We in financial management is basically about taking decisions. Now we have 3 types of decisions in financial management. One is investment decision, and then we are having financing decision, and then we are having dividend decision. Any business decision is actually bucketed in these 3 decisions. First comes the financing decision. From where will I get the money? That decision is taken in financing decision. From where will I get the money? Should I take it from equity shareholders, debenture holders, preference holders? Should I take it from bank? At what rate I have to take? What is the cost of equity, cost of debt, cost of debentures? Everything you have studied. That is capital structure, in what structure I have to take. All these decisions comes under financing decision. Now once you have taken the money, where should I invest the money? Sir, should I invest in project A, project B, project C, project D? Should I open a textile industry? Should I open a liquor shop? Okay, or should I invest here? Should I invest there? Should I keep it in bank? Those decisions and all are taken in investment decision. Now once the first, from where will I get the money? Financing decision. Where should I invest the money? Investing decision. Now after investing, you will get some profit. What should I do with the profit? Distribute or retain? If it is distributed, it is called as dividend. If it is retained, again it is an investment decision, because when you retain, you are investing again in the business. So again, that is what is a dividend decision. So any business, there are only 3 decisions. Every decision bucket into these 3. You tell any decision, I will tell whether it is an investment, financing, or dividend decision. This is something that you have studied in inter, but I'm just giving you an overview again. We have 3 types of decisions in financial management. If you know to take these 3 types of decisions, you are a finance manager or you are the CFO of the company. So any business or any business decision related to finance, I bifurcated into these 3. From where will I get the money? Where will I invest the money and what will I do with the money? Correct. What will I do with the profits or money? That is what is a dividend decision. So investment, financing and dividend decision. These are the three types of decisions. Adala, the most important decision is investment decision. The most important decision is investment decision. Actually, there is a person called as Modigliani Miller. Somewhere you have learned, right? Modigliani Miller. Oi, Interla you would have learned Modigliani Miller. Okay, he is a person who told that financing decisions are irrelevant, dividend decisions are irrelevant. What is relevant is only investment decision, because that is what is increasing the wealth of the shareholders, or that is what is increasing the wealth of the company. Okay, that is what he is telling. I am not telling. Okay, he is telling. Okay, sir. Now, so financing decision and dividend decision are not there in your syllabus. Final. Why, sir? You have studied in Inter. Investment decision also you studied in Inter, but since it is very important, it is again there in final. But financing decision and dividend decision not there in your syllabus. Okay, a little bit here or there it is there, but okay, to the core it is not there. Hey, you guys are happy or sad? Day, happy or sad? Happy, happy. Huh? See, even if it is there, you should be happy. Even if it is not there, you have to be happy. Okay, ba? Irrespective of anything, our nature should be happy only. You become happy, things will fall in place. Sir, yeah, okay. Now, let's come back. Sir, investment decision. What is an investment decision, sir? An investment decision means to take decision whether to invest in a project, business or asset or not. Whether to invest or not is an investment decision. Now the $1,000,000 question is, how should we take decision? Sir, what you told, sir? Now the question is how? How should we take investment decision, sir? Is the next question. Sir, what is investment decision? Okay, sir. Investment decision is whether to invest or not in an asset, in a business, in a project. Now, how should I take a decision is the next question. Let us say I am having two proposals in front of me. Okay, va? Again, not marriage proposals. Okay, va? Business proposals. Now I am having project A. Okay, va? I am having project A, and then I'm having second project, which is project B. Everyone be with me. So one is project A and one is project B. Let me just take an example. Project A is a sari shop. Project B is a liquor shop. Now you all tell me, pa, you will invest in A or B? Where you will invest, A or B? My dear Chalakutis, Santana is selling B. Sir, I will open liquor shop. A Malolan is selling 50-50. No, pa. This decision is either or decision. Either you can invest in project A or you can invest in project B. For example, you are having 100 crore rupees. And both this project need 100 crore rupees as investment. Okay, ba? Both this project need 100 crore for investment. So you cannot invest in both. You have to invest in one. Maloran is selling A, sir, project A, sari shop, sir. Naresh is selling B, sir. Others, yeah, I want everyone to answer. Others, project A or project B, where you will invest? Anjana is selling, sir, project A, sir, sari shop. Others, everyone. Hey, I want everyone to contribute. Only then, you all will be getting involved. Sujita is selling, sir, sari shop. Appo Santana B, Naresh B, liquor. Others and all A. All others are A. Sari shop. Okay, now the one more question, pa. Why sari shop? Why not liquor? Why sari shop? First one, first question, pa. Which is giving more profit, pa? Liquor or sari? Which one will give more profits? Liquor shop or sari shop, pa? Which one will give you more profits? Everyone, which one will give you more profits? A sari shop or a liquor shop? You should not tell don't know and all, okay? Va? I know you know. You know I know. Hey, Malolan is selling liquor may give, but sari will have continuous market. Hey, liquor will have continuous market, pa. World will end, but people will not stop taking liquor and all. You have never seen any task shop, pa. See, a sari shop is opening at 8 a.m. So first a sari shop is open 8 a.m. I will be arranging the saris. I will be standing outside. Madam, come, madam, come, madam, come. Liquor shop I should not call. If 8 o'clock is the opening time, 7 o'clock people will be standing in the queue. Okay, va? The shutter itself will not be opened. And people will be, standing in a queue. And then once 8 o'clock the shop is opened, people will be rushing like anything. Hey, I'm not having experience and all. Okay, I've just seen that. Okay. Are you guys understanding? Okay, people will be like rushing. So you don't even have to call the customers. Customer will be running. Sari shop, you have to do a lot of advertisement. Liquor shop, have you seen the advertisements and all? So much advertisements you are seeing. Sari shop and all, you will see advertisement in theaters and all. Okay, in theaters, advertisement will be there. This sari, that sari, you have to endorse a lot of actresses. Okay, just to sell your saris. Liquor shop, no. You're going into an highway. Okay, you will just see a signboard. Liquor is available here. Okay, your this car will just turn to that side. So that is the reason government is banning advertisement also. But now, you know what the people are doing? They are not putting liquor. They are just putting a glass and then an arrow mark. People who know, they will just turn their cars. Afterwards, government told that, hey, no glass photo also. Slowly what people did, just in the highway, they will put an arrow mark, right? Now, by seeing the arrow mark, they will just go there and there will be a liquor shop. Now, government is also confused because they cannot ban arrow marks and all, right? A arrow mark also you should not put. It's just an arrow mark. Okay. So, anyways, we will end the class in the next 10 minutes, so you guys can be with me. So, I am seeing that liquor, liquor shop is high risk. So, high risk profit is high. Very good, okay, very good. You guys are understanding. Okay, you guys are understanding the things. Legal procedures are more in liquor shop. No license for sari shop. Okay, see, the license for liquor shop is you have to spend crore of rupees just to take a liquor license. Okay, lakhs and crores of rupees just to take a liquor license. Okay, so anyways, I'm just giving you a small overview. Okay, I'm just giving you a small overview. So, project A and project B, sari shop and liquor shop, you have a lot of considerations, risk, return, high, ethical, non-ethical, all these things are there. Okay, so this is just an example. Okay, just an example of how an investment decision is taken. Now, let me not write any shop. I am just talking in terms of project. Project A and project B, how should I take a decision is the question. Because when I give some information, you will be making some assumptions and analysis. No information is given. Project A, project B, 100 crores. Will you choose project A or project B? Tell me, pa. Come on, tell me, A or B? Project A or project B? How will you take a decision? Will you toss a coin? Heads in a project A, tails in a project B? Will you? Yes, no. Will you? Will you toss a coin and take a decision? How you will take investment decision? Will you toss a coin? No. Are you with me? No. No, correct. If you are tossing a coin, which means you are muttal. Who are you? If you are tossing a coin, who are you? My dear Chellakuttis, if you are tossing a coin, now who are you? Muttal. Hello? Now just understand, okay? So you will not take a decision by tossing the coin. Okay, you will not take a decision by tossing the coin. Okay, sir. Question: how will I take a decision? Who will toss the coin? See, I know, okay, Rajinikanth will take a decision by tossing the coin. Okay, Rajinikanth will take a decision, okay, tossing the coin. Heads na this I will do, tails na this I will do. But you guys are professionals. Will you do that? Will you do that? Hello? No. Correct. You guys will not do that. Correct. You are not muttal. Hey, I'm not telling muttal, okay? I'm not telling Rajinikanth. I'm not. You guys are. I'm not telling that. I'm just telling you that you guys are not that. Okay, that you will be. You guys are not Rajinikanth. That you will be taking decision by tossing the coin. Now, how should I take a decision is the question. How will I take a decision? So the question is that you will take calculated decisions. Okay, you will take calculated decisions, which means, sir, before making a decision, I will calculate. I will make some analysis. Okay, I will analyze the project. I will make some calculations. Okay, I will make some analysis. I will make some calculations, and based on that analysis only, I'm going to take the decision. Okay, based on the analysis only, I'm going to make the decisions. So I have to take calculated decisions. Now the question is, what calculations, sir? Okay, now the question is, what calculations, sir? Okay, sir, which means you know what, you know how, you know why. Okay, everything you know. Yeah, why I have to take a decision. Okay, how I have to take a decision. So I have to take calculated decisions, which means I am having some techniques. I am having some techniques of capital budgeting. Capital budgeting na investment decision. Okay, capital budgeting. How will I budget my capital? Or techniques for taking decisions. Techniques for taking investment decisions. Okay, I have some techniques for taking investment decisions. Okay, everyone. Okay, everyone, what are the techniques? Okay, just by noting the techniques, we are going to close today's session. Okay, so we're going to close today's session. Don't worry. But yeah, now we are going to see what are all the techniques for taking investment decision. Now I am bifurcating it into two. One is called as non-discounting techniques. These are also called as traditional method. Okay, traditional techniques. And the second one is called as discounting techniques. So non-discounting technique. The first one is payback period. The second one is accounting rate of return. Accounting rate of return. Okay, which is called as ARR. So discounting techniques. First one is discounted payback period. Okay, discounted payback period. The second one, okay, the second one is net present value. It is also called as NPV. The third one is profitability index. Okay, profitability index. It is called as PI. Okay, profitability index. The fourth one, internal rate of return. Okay, it is called as IRR. And then fifth one, modified internal rate of return. Okay, modified IRR. Or sixth one, modified NPV. Okay, seventh one, adjusted NPV. Correct. These are all the different techniques. Okay, these three are just enhancement. Okay, these three are just not a different techniques. These three are just enhancements. Okay, enhancement of the concept, enhancement of IRR and NPV. Okay, these are nothing but an advanced concept of NPV and IRR. So this is nothing but NPV and IRR or enhancement, modified IRR, okay, modified NPV, adjusted NPV, okay. These are all the different techniques of capital budgeting. Sir, all these words are alien to me. Don't tell like that, okay, va? You guys already know how to calculate most of the things. These are all inter syllabus, okay, va? Inter syllabus. In inter itself, you know how to calculate payback period, accounting rate of return, discounted payback period, net present value, profitability index, internal rate of return, modified IRR, modified NPV. Everything you already know. Yes or no? Everything you already know. Yes or no? Everyone. Everyone answer, answer, answer. Yes, 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 yes. No, 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 no. Okay. You know or you don't know. Okay, va? Anyways, I'm going to take everything. I'm going to take. Okay, va? Yeah, now first I will be having a base. Only then I will be, actually enhancing the base for you. Then slowly we are going to include the risk analysis in capital budgeting. These are called as techniques of capital budgeting. Then slowly we will be including risk analysis in capital budgeting, where we are going to see standard deviation, coefficient of variation, regression, coefficient, everything we are going to see. And slowly we are going to learn how to take a decisions, which means you are having some decision rule. You will calculate payback, but I said right, calculated decisions. So what calculations are? You will calculate discounted payback period, and based on the discounted payback period, you will take a decision. You will calculate discounted payback period, and based on the discounted payback period, you will take a decision. You will calculate NPV, based on the NPV, you will take a decision. You will calculate IRR, based on the IRR, you are going to take a decision. And everyone is having some decision rule. For payback period, more the payback period is not good, lesser the payback period is good. So that is what is the decision rule. Net present value, more than present value is good, lesser net present value is not good. So that is what is the decision criteria. IRR, if the IRR is more than KO, it is good. IRR is less than KO, it is not good. So these are all the decision criteria for investment decision, and each and everything we are going to see in the next day. Okay, tomorrow's class we are going to understand each and every techniques of capital budgeting, which are the non-discounting techniques and the discounting techniques. Are you all with me? Yes or no? Please tell me yes or no, everyone. Super. Okay, super. Okay, so this was the base. Okay, this was the base that we have did in the today's class. Going forward, okay, we're going forward slowly. Now we will be building our discussions further. We will be building our discussions further of how to, okay, how to get more advanced concepts in the investment decisions. Okay, so with this we are concluding today's class. In the end of the day, I want you to know, okay, I want you to write it down, like how was today's class, if you were comfortable, and slowly we are going to learn a lot of things. Our main objective is enjoying this subject. Okay, so keeping this objective in mind, we are going to study this subject. Okay, so just write a few words. Okay, so how was the class? Just to, since this is the first class and we have just got introduced, okay, I want you to know, since we have just got introduced, I want you to know that how, the class was. And you guys are not single, okay, so I'm waiting for your responses. Okay, Super. See, the class timing is 6:30 to 6:30 a.m. to 9 o'clock. Okay, well, 6:30 a.m. to 9 o'clock. So, okay, I understand that most of the people will be working, so we'll be taking care of the time. Don't worry. Okay, well, we will not be extending the class at all. A Sundays la vechi save. Okay, well, but we will not be extending the class. So, no, it is not 6:30 to 8:30. It is 6:30 to 9. Okay, it is 6:30 to 9. You can just confirm it once again. The class timing is 6:30 to 9. Correct, other students? All others are informed 6:30 to 8:30. Yeah, just let me know. Oh, 6:30 to 8:30 inform பண்ணிருக்காங்களா? Okay, let me just confirm because I saw 6:30 to 9. Anyways, okay, we are going to confirm that. That is not a worry. Are you guys comfortable till 9 o'clock? You can just tell yes, no. If you guys are not comfortable, probably we can adjust. Okay, sure. Yes. Okay, fine. Okay. So with this, we are concluding today's session. It is like, okay, it is like a web series where slowly each and every episode will unravel a lot of concepts. Okay, so with that, we are concluding today's session. I hope you have enjoyed today's session, and with the same level of excitement, I want you all to be on time tomorrow also, and we all will be discussing a lot of things tomorrow. Okay, so thank you very much. See you all in the next session. So thank you very much. Yeah, bye. Thank you.